Hello and welcome to the Fund and Focus series. I'm Hunsley of Livewire Markets, and joining me today is Adam Lieutenant, Healthcare Investment Specialist at Elanor Investors, and today we are discussing the Elanor Healthcare Real Estate Fund 2. Adam, welcome.
Thanks, Hunsley.
So, for those who might not know, tell us a little bit about what Elanor Investors do, what you invest in, and why you operate in the spaces that you do.
Okay. Elanor is a publicly listed funds management group. We concentrate on 5 key areas and have over $6 billion worth of assets under management. The 5 key sectors that we concentrate on are retail, office, industrial, hotels and leisure, and the space that I look after, healthcare.
Okay, so let's drill into that then. I understand this is the second healthcare real estate fund that Elanor has launched, so why don't you tell us about the demand that you're seeing from investors and what experience you gleaned from running the first fund?
Yeah, well, the inaugural fund, the investors did very well. They received a 12% per annum IRR over a 3-year period, and we now have many investors looking forward to getting into this second fund.
Okay, and that includes from existing investors from the first fund to that second one as well?
Correct.
All right, and what kind of demand are you seeing from outside investors as well?
We're currently in the market at the moment, and there's a good demand.
Okay, excellent. So, listen, I think Australia has a world-leading healthcare system in our backyard. I think that's not necessarily a secret to anybody. Obviously, that flows through to the investment opportunity. But I feel you'd be a really good person to ask about this. What differentiates healthcare real estate from other healthcare opportunities? In
Australia, we're very lucky. We have government funding, and it's both to state and federal level, and also we have private health insurance, and we have not-for-profit operators. And these 3 groups all deliver healthcare services throughout the country. Okay, so that's the healthcare system, but what differentiates real estate as an actual investment opportunity as opposed to, say, healthcare stocks that people could buy directly? The thematics are there for in the healthcare industry is that we've got an ageing population, and as you get older, you use more healthcare services. And we've got advancements in technology that are all leading to a huge demand for healthcare services. Other industries or other healthcare spaces you might think about investing in, say the large-scale hospital systems like the Ramsay and the Healthscopes of the world, they're facing their challenges at the moment. They've got reducing revenue, and they've also got their income and costs also rising. So their margins are being crimped at the moment. So I feel our space that we play in will be advantageous. So reading through the fund's documentation, I thought it was interesting, saying that the fund intends to focus on these deep value assets. So what do you mean by that, and what's an example that you're looking at? Well, a good example is RPAH, our first seed asset. We are looking to purchase that asset. It's a capitalisation rate of 6%, which is the peak valuation was 125 basis points tighter than that. The dollar value that we're looking at is 117 million, previously valued at 134 million. And what I like about RPAH is that it's a perfect healthcare ecosystem. And what you need for a perfect healthcare ecosystem is access to medical professionals, which we've got because of its location, inner city Sydney, Newtown, not very far from the CBD. 2, we've got healthcare infrastructure at our doorstep. We've got the 1,200 bed Royal Prince Alfred Hospital, only 200 metres away. 3, we've got infrastructure on site where they've spent a lot of capital, right, for day surgeries, for pre-operative, for radiology services. And it's also got very easy access for our patients. So that whole referral network is what the surgeons and the specialists benefit on above the building. And of course you're getting it for an attractive valuation, which is the deep value part, I suspect. Correct. So that's an example of the deep value that we see out there. Other opportunities that may be out there is to remix some assets. So ones that we have maybe 50% of the building is healthcare, we can add some other healthcare services there, or it might be a conversion from a office to healthcare. Yeah, right. No, understood. So when you do what you do, and you've already mentioned your seed asset there, the old Royal Prince Alfred Hospital. So what is the criteria you use when scouting out the perfect investment opportunity for the fund? I spent 15 years at a group called Primary Healthcare, and I was the general manager of property there, and it was an operations company, healthcare business. And what became very clear to me early was that healthcare assets need medical professionals to enable patient flow. Without the medical professionals, there's no patients. So I try to look at all these assets like through the eyes of the operator. And so I take with that lens to all the assets that we look at.
So I mentioned earlier that this is the second healthcare real estate fund. I'd be curious if you could share with us an example of a previous success story, maybe even from the first fund.
Yeah, Pacific Private would be a good one. It's an asset that we've got on the Gold Coast, well located to where medical professionals live and want to work. And also it's got a anchor tenant there, meaning a day surgery, run by Nexus, one of the leading day surgery operators in the country. And because Nexus are there, it generates a whole ecosystem of other healthcare operators. We've got pathology, radiology, and other services upstairs.
Okay, excellent. So I'm curious, in what kinds of market environments do you expect this fund to perform at its best? And when do you think the fund might potentially underperform?
Look, the good thing about healthcare is that the need's always there. Right, the patients are everywhere. It's just a matter of servicing them. We proved that through COVID. We didn't skip a beat, in fact, even entering into new leases through that period with the pathology and radiology operators. So that's one of the benefits of the healthcare space, is that uses are ongoing.
Yep, no, absolutely. Finally, we should preface this right out of the gate, I guess, but this opportunity specifically will target wholesale and sophisticated investors. So for them, who will be watching this and reading this, what is the minimum investment for this fund, and what kinds of returns or yields are you expecting?
The minimum investment is $25,000, and the distribution yields that we're looking at is between 5.5% and 6.5% per annum.
All right, Adam, Lieutenant of Elanor Investors, thank you for explaining that to us. Really appreciate having you on the program.
Thank you.
And thank you for joining us. If you enjoyed that, you can subscribe to the Livewire and Market Index websites, as well as our YouTube channel, where you can find more funds in focus. And we thank you for watching.